Okay, let's start. Thank you so much for everybody for being here, and thanks for the panelists. I'll start with Anne. And you basically left a traditional bank, a Allied Irish Bank, in 2014 to start your own bank. They're curious, we want to know why is that? What kind of opportunity you saw? And what makes your bank better than traditional banks in what you do?
Well, after about 30-odd years in traditional banking, in lots of technology roles and operational roles, I came to the conclusion that the traditional value chain was broken. And customers were far too attuned to what's going on out there nowadays. They understand technology, they want the very best tools, and the traditional banks weren't offering that. And the traditional banks had a cost structure that wouldn't let them actually adapt. So Starling is all about providing current account banking, checking account banking, and letting the customer accumulate lots of data around their transactions that allows them to share that data with other partners in a marketplace. So we believe in a different sort of value chain. We believe in a value chain that actually lets the customer decide, allows them to work with different partners, different providers, to provide a whole new experience that is just not about providing a captive customer. Traditional banks basically take a customer, capture them, sell them lots of different products, and hold them sort of close to that sort of one organization. We believe in sharing, we believe in openness, we believe in bringing the right partners together to satisfy the whole solution.
Mm-hmm. Just to clarify, I as a client, what do I gain going to your bank versus staying in my bank?
Well, first of all, we have the sort of the hygiene factors of giving great customer service, better pricing, better customer experience. Mm-hmm. But we also give the customer the power of their own data. We capture lots of additional data around a transaction. Every single transaction allows us to create more value for the customer. We build up this data. We use machine learning and artificial intelligence to give insight on that data. And that particular insight allows us to recommend products in a marketplace. And these marketplace products can be underwritten and given to the customer in a much more seamless way at the right pricing. So you get a great current account, you get all the services, you get all the data, but it's your data, the customer's data, allows you to get other products at a better price.
Mm-hmm. Okay. Jay, and you sort of help innovation come to a traditional bank, BBVA. Question is, what is out there what kind of innovation that you are bringing in as an added value for BBVA that helps BBVA? So how a traditional bank gains from the investments you make?
So at Propel, our job is first and foremost to make investments that are profitable. We really don't look for opportunities where it's a vendor relationship with BBVA.
Yeah.
For the most part, the innovation, if you call it that, it's more so about business models, about customer needs, and it's really this indirect benefit that they get by just being sort of a little bit closer. I like to call it they have a seat at the table versus just talking to the VP of sales or somebody else at a smaller organization to try to glean or to read on the web to understand what these companies are doing, or have McKinsey tell them what they think is going on. And for us, our job is to just really be an advisor to them, mm-hmm. to help them with any of their strategic initiatives, not necessarily always bringing in technology that's going to be put to use. Certainly we do have a number of our portfolio companies that are vendors of the bank, DocuSign, but I wouldn't say that that's, I think DocuSign would say that's strategic, but I don't know if BBVA would call that strategic.
So what kind of companies are you looking for? What do you want to invest your money in, or your ventures money?
We're at the intersection of financial services and technology. Anything related to financial services. It could be a disruptor, or somebody who's trying to take away the business from a financial institution, or it could be someone who's a vendor.
how far in the globe you look for a company?
Up until the summer, we were just focused on the US, and now we've just opened up an international fund, highly interested in a few countries in Europe, Scandinavia, really interested in Latin America, as I was saying earlier. I think Brazil is an amazing market right now that's just ready for disruption. Mexico, we're looking a little bit in Asia, but it's a little bit harder. All of us are based in San Francisco, so trying to do as much as we can.
Okay. Ross, you help companies connect applications, devices, and data to unlock digital assets. And can you just explain what exactly that means?
Yeah, I will. Yeah, my mum has no idea what I do. So the reason why it's important to connect applications, data, and devices, if you think about where traditional banks are struggling and where fintechs are actually racing ahead, is that they understand how to connect between the consumer experience all the way to the back-end systems and leverage that data to make smart decisions. Mm-hmm. So what Mulesoft does is we help both fintechs and big banks. We're betting on both sides. I don't know who's going to win. And we give them a platform to surface up assets, so customer information, product data, transactions, behavioral data as services, so that developers in those organizations or in an ecosystem can discover and use it and create new value-add applications and services on top.
Okay. How open or how excited are the companies, or even, let's say, particularly traditional banks, to get that done? Is it hard to try to, do you have to explain them exactly what they're missing and what actually the opportunity that they have in front of them with all the data that they have they don't even know? Yeah,
so I think if you talk to a traditional bank, excitement isn't the word that they actually use. It's a bit more terror. We're sort of seeing sort of Darwinism of banking, right? And there's a race to figure out what is the next products, what's the next packaging, what's the next type of services that we need to figure out. And the way banks have worked, right? Think about how they've grown. They've created things like current accounts as a sort of loss leader, which, you know, Anne's doing a very different way of doing that. And then they offer products and services on top, but they vertically integrate each of those services. What they've got to shift to is a model where they're part of many value chains. So I might be able to offer loan origination as a bank, as a vertical product, but I can also offer things like appraisals and background checks and other types of means for originating that loan through third parties or my own services. So they're trying to offer basically APIs, services that developers can build into their front-end applications. Okay. I think the banks have missed and lost the last mile consumer experience, and that's really what fintech is serving for the most part. And they haven't done a great job on the infrastructure side, and that's also where fintechs are growing up. So it's a pretty interesting battle. Mm-hmm.
When you think of the customers, the side of the customers, and everything that they are being offered now through fintechs, PayPal or your bank, how open are customers in putting their money in companies that they don't know, or letting their money pass through companies that they don't know, as well as a traditional bank? Is it a question of trust here or not at all? The millennials, of course, are much more flexible, but we still have a whole world of non-millennials out there. Okay. So,
I think the simple, the glib answer is, sort of people like ourselves, which are banks, are covered by guarantee schemes. But that's nothing to do with it, really. People trust organizations that they understand and are transparent. Right. People trust organizations where they see certain behaviors, and people empathize with those organizations, and then trust comes. And we were surprised how quickly people were embracing the new world. We thought that when we asked people why you'd switch to Starling, they say it was guaranteed, it's a proper bank. Mm-hmm. No, they said they understood us. Which is something very, very new, where you work with communities of people tell each other about a service, people embrace something that's different, something that's exciting, and something that they understand how it works.
Mm-hmm. Mm-hmm. I would absolutely agree. I mean, I don't know if you guys, you used the word simple at the beginning of this. I don't know if you guys remember Simple, the bank that started, boy, it was around 2011, 2012, when banks were not so loved. And they had, before they even started, they had over 100,000 people on a waiting list because they promised transparency, because they promised to finally deliver the knowledge of here's how your account really is going. We're not going to do bad things to you. And they had no brand.
Well, that's the thing, right? So banks, for like hundreds of years, have relied on trust, right? And you know they've sort of built trust into this aura of course you wouldn't put your money anywhere else. But actually, like quick show of hands in the audience, would you bank with Amazon? Quick show of hands. All right, about 30% of you. Right. Why would I bank with Amazon? They have no track record. They don't know how to really manage payments. But because we trust them as a vendor, and that's what Google's betting on. It's kind of what Apple tried to bet on with Apple Pay, and they can continue to invest there.
But they have a brand. They have a brand that's very known.
Yeah.
What
but
about
if you have
the
an unknown brand, you're not taking a big risk. Like maybe I won't put my whole paycheck into an account, but I'll try it out. And then if the service is good, I can just put more money in. And I imagine one of your KPIs is, are you getting a monthly paycheck? Are you driving real value to your customer? And I'm sure you're measuring that as a acquisition of a lifetime customer, right?
What we measure is how many customers tell other customers and how customers find us. And when customers find us because somebody said, Starling does this, and I enjoy the service, that is our big measurement.
Do you measure NPS?
Yeah.
Can you tell us?
Sorry?
Will you tell us what it is?
No. Okay. Because
but if it's good, why not?
Yeah, okay. At the moment, I don't know what the number is today.
Oh, okay.
But we actually are the only bank that asks people to rate us after every single interaction. And at the moment, we get a huge amount of feedback from those interactions. We get people telling us stories about how we've helped them, and actually gathering that information and bringing it into something where we can refine the next iteration of the product is, it's very, very worthwhile.
So, and then we go back now to the traditional banks and how the traditional banks, and actually, as a matter of fact, whether traditional banks can keep up. What do you think? Can they keep up? I mean, without wanting to jump, but the future of the banking, are we going to have tons of fintechs or smaller companies doing services that are fragmented, or we're going to have a fintech or fintechs that will become as big of a service provider as traditional banks?
I think that the traditional banks will replicate and copy everything the fintechs are doing today. I do not think what's out there at the moment is unique, and everything will be copied. So what we have at the moment is lots of fintechs producing great products that give great customer experience, and they're also lowering and pressurizing the price points. The big banks will attempt to copy and will copy. If they lower their prices to match those price points, they cannot support the tens and tens of thousands of people that work with them.
Yep.
So it's not a question of innovation. It's not a question of not being able to deliver. It's a question of, will they be able to shrink fast enough? And that is going to be the big challenge of the next few years.
Yeah, I'm going to add to that. So, I mean, we work with a lot of big banks who are going through that exercise, right, which they're looking at their 50 years of complicated back-end systems to clear transaction processing, to deal with the regulators, to capture the information the right way, so if they get audited, they can actually produce the information. It's amazingly complex, right? It's a mess. And for them, the big stress isn't replicating the front-end technology. It's, even if I could build a great app, I can't connect it to everything else. And what we do with APIs and this idea of an application network is give them a new platform in the organization. It's basically like having a SaaS platform for your own business in a bank. And I think that enables them to think very differently about where they're going to provide value and what kind of ecosystems they can build around their core value. And ultimately, they'll shrink. right? They won't get bigger, they're going to get smaller, but they'll get more laser focused on the things where they can drive the most value, and they add the most value to an ecosystem. It won't be about just dealing with one bank. It's going to be about dealing with lots of banks and different facades and providing back-end services.
But if you take that model, all the big banks are going to try to replicate those new apps, those new services. They are going to implement those middleware layers, the layers that make that possible. But those are going, and they need to do it in order to deliver those products. But what they can't do is take away all the layers and layers of systems that sit behind that. The people, the systems, the customers that they had 20 years ago, which they still have some sort of obligation to. That particular cost base is the huge problem. And what you're going to get is people really struggling with that cost base. You're going to have price pressure, and you're going to have lots of innovation. And if you think of many of the fintechs at the moment, many of them are out there at the moment building great customer bases, but don't necessarily have a viable revenue stream. So we've got a very, very interesting dynamic going on here. We've got the fintechs needing revenue with lots of customers. We have price pressure. We have people copying what's going on the app side. And then perhaps in the future, we won't even have apps. And the interface with the banks may be the Google or the Amazon. In a PSD2 world, you may have the back office, the account provided by one bank, and Amazon sitting on the front end. So we may be all debating a problem which is going to disappear because new entrants are going to come in and they're not going to be the people we expect.
What do you think of this idea of a bank? I was in a conference recently and someone said, people don't need banks, they need banking. And ultimately, what we're going to see in the future are banks, they're curators of services. So they're not going to be actually the providers of the services, but rather find the right match to the needs of the customer. Would that make sense? And are banks open to do that? Because we talk about boardrooms, they're still largely, the members of the directors of a bank are, sorry to say, but older men who a lot of times don't have absolutely any clue of what technology is, what it's out there, or they're not even willing to listen.
I think not all banks are created equal, and if there is technology leadership at the bank, which is unusual, to have someone at the CEO level that comes from a technology background, it makes all the difference. I don't think that there is any one winner here, but ironically, I wonder if you were at the same conference as I was, because last week the chairman of BBVA was talking about the exact same thing, where he's saying in the next 5 years that they think that BBVA will sell more of other people's products than their own and become a bit of a marketplace. But again, he's a little bit of a different guy because he comes from a technology background. I think other bankers who come up from the banking world, as I think Anne was eloquently saying, it's going to be a little bit more difficult for them to really transition.
You can imagine, the conversations in the boardrooms of the incumbent banks. BBVA are talking about marketplace. Is HSBC going to sell a Barclays mortgage, right? So in a world where you plug and play,
it's the right thing for the customer.
The problem is that they'll actually be so scared to do so, to let somebody in the door.
They are actually doing this. So, and I don't think it's about the boardroom. I think they're taking leadership from the CTOs, the digital officers, and the CEOs I've spoke to at banks fully understand that they're going to go through a pretty massive change. Their challenge is translating that into how do they get the business to align on what's the right thing to do, what's the right things to build. I mean, if you look at, we just talked about marketplaces. HSBC just announced that they've opened up a new HSBC banking application that brings in the data from 21 rival banks. Fairly quickly, I would hope that they'll look at that and say, what are the other products and services we can offer to customers through that channel, and look at it as an affiliate. It'd be a real shame if they missed the boat and they thought it was just about sharing bank balances. I think they're looking at ecosystems as well. I know, Barclays have talked about becoming the first API bank in the UK. We've got Atom Bank, who, for mortgages and loan origination are the first mobile bank in the UK. I think I don't think it's an issue of the boardroom. I think it's an issue of, do you have enough vision from the top and enough execution from the top down to drive the best strategy for your consumers? And oftentimes they just don't quite know what that right step is going to be, and rightly so, because it's complicated. So it's a minefield.
Mm-hmm. And I think we have almost just 1 minute. Can I just quickly ask what is out there, or what you, again, looking for in terms of technology that you think it's important to be absorbed by the sector? Players, technology, services, solutions. Is there anything?
It may sound cliche, but I do believe there's a huge opportunity in the data, and then using machine learning to, I hate to say it, AI, because unfortunately it's something
just throw in blockchain and we're done.
Yeah. Okay, and blockchain.
There you go.
Just because there, as Anne was also saying, there's so much cost base there that really doesn't need to be there anymore, and there's so much that can be done with this core technology.
So for 20 odd years, we've been using customers' data against them to sell them more stuff. Mm-hmm. You know, we're now at the point where we can use a customer's data for them to own that data and to give them insight on their data using artificial intelligence and machine learning. If we as an industry can apply this technology to a customer's own data, the customer can benefit in so many different ways, from an experience point of view, from a value for money point of view, and we can help customers have a better financial life. We can figure out if they have enough money to the end of the week or the end of their life. And that's an important value add we can give to customers.
But that's also a block, right? So think about fintechs, they're not regulated, right? So I can use data in lots of different ways. I can build up, potentially interesting business models. But as soon as I get to a point where I need to be regulated, suddenly I need to know what my engines are doing with that data. I need to show lineage.
Sure.
If I'm running it through AI engines, how do I know how decisions were made? How do I know that I gave you a mortgage and I didn't give this person a mortgage, and how do I justify it? Mm-hmm. Like it gets a lot more complicated in the banking world than it does in the fintech world. What we haven't seen yet is those two worlds collide, where some of the fintechs get big enough where they start to be regulated and their business models start to feel the stress. I think that's going to be a pretty interesting turning point, and we'll be here in the next year or two talking about how do you solve that problem.
Okay. Well, unfortunately, that's the time we have. We could be talking here for much longer. So, and I'm sure everybody wants to eat, so go eat. Thanks a lot. Thank you for the panelists.
Thank you.